It's still in the conversation because of the ambitious vision of on-chain computing, the focus on web speed performance and scalability through subnets, the ongoing development of canisters and decentralized applications, and the simple fact that any project aiming to replace traditional IT and cloud services continues to draw attention in a market that cycles through infrastructure narratives. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on ICP. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to outright negative for an extended period. You'll see a mix of hold and sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets have flipped around, but the short term outlook from pure chart based sources remains defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is more coverage for Internet Computer than for lower ranked names because of its ranking and technical ambition, but the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. Here's the real debate. Is ICP actually undervalued at these levels, or is this a value trap after years of relative underperformance? One side points to the unique architecture for running full applications on-chain at web speed, the governance model through the NNS, the potential for decentralized cloud alternatives, the distance from previous highs, and the idea that infrastructure for on-chain computing could re-rate if capital rotates back into ambitious layer 1 narratives. They argue that if adoption of canisters and real-world applications grows, these levels could look reasonable in hindsight. The other side says, look at the chart and the market structure. Many high ambition layer 1 projects that launched with large valuations have struggled to hold value once attention faded. What's going on with Internet Computer right now? The chart has been under pressure for a long stretch, sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Internet Computer is a blockchain network designed to run decentralized applications at web speed, positioning itself as a general-purpose world computer that can host full applications, data, and services entirely on-chain as an alternative to traditional cloud infrastructure. ICP is the native token used for governance through the network nervous system, staking, node rewards, and paying for computation and storage on the network. It currently ranks near the top 50 by market cap with solid daily volume, and the price has been trading near the levels you are seeing after a multi-year decline from previous cycle highs. On the technical side, the bigger picture remains a clear long-term downtrend from the much higher levels reached after launch and previous cycles. Price has spent extended periods making lower highs and lower lows, with recent action testing support near multi-month levels. Short-term bounces have occurred but have consistently failed to reverse the larger structure. Momentum indicators have been mixed to weak on the higher time frames, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the daily and weekly still lean bearish, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is some resilience when price holds the recent lows, but the overall structure still looks heavy. Volume and momentum have been soft for long stretches, competition from other scalable chains has intensified, and the market has consistently treated ICP as a lower priority name despite the technical vision. That's the classic trap setup. The technology story is ambitious and real, the network continues to operate, but the market keeps assigning it a lower valuation while attention stays elsewhere. Retail often gets caught here, buying the world computer will eventually matter argument while the larger trend remains downward or sideways. Nobody knows which way this resolves. The chart is still fighting the technology narrative, the network continues to operate with its unique architecture, and the market remains selective about which ambitious layer 1 stories it rewards. So the real question is simple. Is this the kind of project that can finally break out of its long underperformance and re-rate higher? Or are we just watching another established infrastructure token settle into a prolonged period of low relative interest while people argue about valuation? Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short-term bias flips with any real confidence. Longer term, it comes down to whether Internet Computer can convert its on-chain computing vision into sustained demand and relative outperformance for the ICP token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns to layer 1 infrastructure. Internet Computer sees growing adoption of on-chain applications, governance and staking dynamics support the token, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate highs over a longer horizon. Worst case is the opposite. Volume stays muted relative to peers, relative performance continues to lag, and the downtrend simply grinds lower toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform. Risks are meaningful, volatility is still present, a broader risk of move in crypto or continued rotation away from mid-cap layer 1 tokens can pressure the price further. Downside remains open if the recent support zone breaks and the downtrend simply continues. Retail traders love the long-term decentralized cloud and on-chain computing story and end up holding through multi-month or multi-year underperformance. Liquidity is solid relative to pure microcaps but still thinner than the very top names, so larger moves can still happen quickly. There's also the structural risk that comes with any ambitious infrastructure project. The narrative has to translate into real application usage, real developer activity, and relative demand, or the token simply fades under competition and shifting attention.